Two big announcements dropped this week. So, first, the Ontario government just eliminated the provincial HST on new homes under $1 million for first time buyers. Second, the Bank of Canada cut its key interest rate again, trying to boost confidence and ease borrowing costs. So, on paper, it feels like relief. I mean, rates are down, taxes are down. But here's the real question: does any of this actually help you, the buyer trying to find a home right now? Or is it just relief for someone else, somewhere else, sometime else? So let's break it all down. So here's what actually happened. The Ontario government just removed the provincial portion of the HST. So that's 8% for first time buyers purchasing new or substantially renovated homes under $1 million. And there's a partial rebate for homes up to 1.5 million as well. So combined with the federal relief already in place, that means there's no HST on the first $1 million of value. So that's real money. And for developers sitting on unsold inventory, this could help move product. I mean, it gives them a new marketing line: buy now, pay no HST. So, I mean, that's a win, at least on paper. So here's the reality check. How many new homes under $1 million actually exist in the GTA right now? Because, I mean, in Toronto, especially near transit, that number's tiny. And for most first time buyers, the challenge isn't the tax, it's the timeline. So if you've got a baby on the way, you're not waiting 3 to 5 years for a pre-construction project to finish. Or if you're a family trying to upsize, the new builds you qualify for aren't even built yet. And the resale homes that you can move into today are, I mean, often north of $1.5 million, or just not built for real families anymore. So yes, this tax cut helps a niche group of people, but it's not the lever that fixes housing for the people who need it right now. So this is where we've got to be careful. I mean, agents, developers, and media will celebrate this like it's the cure to the housing crisis, but this is what I call headline policy. It looks good in print, but it doesn't change the lived reality for most buyers. So while we're talking about tax relief on future homes, there's a whole generation of families out here trying to find space today. So that conversation about affordability right now and the inventory that already exists keeps getting lost. So the truth? I mean, there are still affordable live now options in this city if you know where to look. So that's where my focus stays: under the radar neighborhoods with real homes for real families. Because maybe the question isn't, are we building enough? Maybe it's, are we supporting the people already trying to move? Okay, now let's circle back on rates just for 1 second. We've relied on the interest rate lever for too long, in my opinion. I mean, every time the market slows, that's the go-to move. But rates are a blunt instrument. Sure, they help with monthly carrying costs, but they don't help families make their moves through those important life stages. So if governments really wanted to help right now, they'd focus on the resale market, the homes that already exist, and the families who want to trade up or downsize. Because for most people and for most of my clients, the barrier isn't always monthly payments or the supply of new homes. It's the friction of moving. I mean, the land transfer tax alone can wipe out a family's down payment or renovation budget. So if we introduce things like a land transfer rebate, made real estate losses tax deductible, or, I mean, if we let families deduct moving costs from their taxes, we'd unlock mobility almost overnight. And if we want to circle back to carrying costs, I mean, if 50-year amortizations exist for investors buying multiplexes, why not offer them to end users who plan to stay in a house long term? I mean, that's not reckless, that's staying power. And for buyers who want new but can't afford both a purchase and a renovation, why don't we expand the purchase improvement loan so they can revive older homes instead of overpaying for new ones? And I can tell you from experience, there's a lot of inventory stagnating on the market that just needs a little bit of TLC. So creating low or no interest improvement loans wouldn't just boost the real estate market, it would also create a ton of work for the people in the trades. I mean, too many of us in real estate talk about record inventory like it's some disaster, then cheer for even more new construction. Now, I'm not going to absolve myself. I mean, I've done this too. But maybe it's time we ask, instead of how do we build more homes, it's how do we make the homes that are already here work better? So, if you're a first time buyer and you qualify for this new incentive, amazing. Let's talk about how to leverage it the right way. But if you're not in that narrow box, don't fall for the headlines. There are still opportunities hiding in plain sight. Pre construction isn't the only path to ownership. It works absolutely great for some, but it doesn't solve everyone's problems. Across the city, there are undervalued options. Family sized condos, semis, multiplex conversions that all offer real value right now. And that's what I focus on every day. So if you're serious about buying in Toronto, let's find the opportunity that fits your life, not just the latest policy headline. So I'm Josh, and this is Under the Radar Real Estate. So while the headlines chase relief, I'm always going to be focused on what's actually real. So let's find your place right now.